Hey, good evening, Ken at Tortoise Capital. It is the nightly strategy podcast for June 11th, 2024. So we just had a pretty interesting coaching session with cohort 3. So every single one of those guys within less than 2 months uh, on the tactical trading are having at least 50-50 wins versus losses, and their winners are paying off 2-1. In all of the other cohorts combined, the win rate is a little better than 50%, and the payoff rate is at least 2-1. So we're getting those kinds of intraday trades reliably. And so that leads us to say, well, when I'm comfortable that my tactical engine of change with no overnight risk is producing these kind of numbers, and it starts throwing off money that can be placed into swing trades and longer term dividend producing trades, or even just passive ETFs to long term buy and hold. Now suddenly you get real decisions on what percentage should I have in position trading, how much should I allocate to swing trading, and how much to day trading. So we had a thoughtful discussion about how to make that trade-off into something that can be managed routinely, and we can synthesize that into turbo trading so that position and swing trading takes on a certain flavor, and swing trading and day trading takes on a certain flavor, all of which is basic craftsmanship with standard patterns that are fractal on any time frame that we're looking at. And then it's simply a matter of finding the timing and the rhythms to achieve professional management. So it was a really good session, and was probably worth the price of admission into the coaching program just to be able to listen to that discussion among some trading professionals. So again, price on the coaching program is going up on 1 September. It'll never be this inexpensive again, and you get lifetime access to the recordings. All right, let's take a look at the sniper trade of the day, get down to business, because it comes down to effectiveness with standard patterns on each and every trade. So this is DIA on the 10 minutes. Ten-minute chart, sniper trade of the day. Here was yesterday's close. Here's the open. It opens here, runs up a little bit, and then starts collapsing. At that low of the day, we take the short position. And we put on the standard risk. There's our standard risk box. And as is typical of trades in a compound critical state, that thing moves out in our direction right away. Not unusual. Here's where the market opened. It ran up a little bit, came down. We got short. We put our standard risk box on it. It closes here. The next bar is down here. Bar closes here, and now it opens here. So now the question is, with 2R in hand, so twice your risk box, where do you put your stop? I could keep half, maybe put it just above the RL 270 or the anchored VWAP there, or just say off the low, How far back do I want to let it go? Maybe one wrist box. If that's one wrist box off the low, I could set my stop here. So you could decide, would you put your stop at 1 or 2 or 3? Or would you just cash this at 2.5R? Your call. Good problem to have. Open risk was about 20 minutes. I end up taking a 1, 2, 3 exit. What's a 1, 2, 3 exit? Well, here's the low. It opened here, went this high and closed here. So this was that second bar right here. So there's a low, a higher low. That makes this bar 2. That makes this bar 1. So it opens here, sells off a little bit, and then runs higher, and it crosses the anchored VWAP or the intraday VWAP. So I just exit here, and I cash this winning trade. On this much risk, that much gain is about 1.5R. Then it keeps going up, so I reverse right here. Up it goes. It rolls over. When the R10 rolls over, I activate the exit at the skin of the dragon. So I capture this much gain against this much risk, and that's about 0.5. So now we're at about +2. Why is +2? If I could net 2 a day, if I could just do that every day, if I could get +2 per day and get 10 per week and 500 per year and risked $200 per trade, that would net 100K a year on an individual risk of $200. That's 50 cents. So that means I have 400 shares, short and then long. That position would cost about $13,000 if you were buying the position outright, or one contract in the E-mini. It continues to roll over. Comes through the dragon. So I get short here. Same risk box. This case above the VWAP or the 30-period Bollinger Band, sorry. It hits the PSAR and holds support. So I exit here with just a tiny little fraction of gain, not even enough to record, but we didn't lose money on that trade. It continues. We now have a Kata 2 pattern. Why is it a Kata 2? Well, because the R10 is here. The next turning point was here. The higher low after a successful trade makes this a Kata 2. We're north of the dragon, which is rolling up. We just crossed the Bollinger Band mean, so we're on the favorable side of the trade, and we have reasonable targets of the 3-day and 5-day anchored VWAPs and yesterday's close. So this trade from here could reasonably get to those price levels, and on this much risk, you've got a 2-to-1 reward to risk ratio just on the tactical trade. So you don't have to believe that this is the perfect trade of all time. It's just good enough to trade and see what happens. So as soon as I can get my risk out of this thing and above my entry, I'll be happy. Right about now, you should have your stop up around here near the skin of the dragon, and you're going to at least, therefore, make that much. And you make a little bit more by exiting at the skin of the dragon, and that's it for the day, and that is about 3R. On the most conservative of the big, broad global indexes, the Dow Jones 30 Industrials. On a day where it didn't particularly move large. Here's one on EWW. Here's the gap down. It moves up a little bit, sells off, finds support, closes here, opens here, starts moving up. I get long here on a 1, 2, 3 entry. It has moved one standard risk box off of the low of the day, and it's going to go up and try and close the gap. So if it just gets to yesterday's close up here, 1, 2, almost 3-to-1 reward to risk ratio on a closure of the gap. So on a reasonable trade frame, the only thing I have to do is wait for an opportunity to move my stop north of my entry in order to lock in no lose plus dinner for 2 when all of my psychology changes, and that would make this a science project. Let's see how much we earn. It moves in my favor, stalls and scratches. Never followed through. Is that going to happen sometimes? Yep. I try again on a supported spring crossing. Why is it a supported spring crossing? Well, because with the gap, you have the harsh sell-off. It bottoms out here. You actually have a rising low. You could almost call that a kata 2. But it crosses the VWAP or crosses the PSAR. The Bollinger Band mean is in sight, so I put my standard risk on it. Up we go. It pulls back to the edge of the dragon. So we just cash like we're supposed to. Get that much gain against that much risk. That's about 0.5. This one is a scratch. That's a 0. Oh, it crossed below. The Bollinger Band mean and the VWAP, so I put my little risk box on it. I go short. It gets a quick scratch, so I stop and reverse because it's crossing the VWAP again. Now, as you were, that was just a scratch. And it closes. Could have re-entered here, but we get a scratch. Sorry about that. And we get about 0.5 and another scratch. So that's really just a 0.5. So with 3 from the other one, we have a 3.5 day. And all I need to do is net 2 a day on my pathway to income trading. See how the traders did today. Here's Constantine. He's trading, let's see, is this gold? No, that's the E-mini NASDAQ. He sees a double bottom. In the usual way. He has the PSAR flip. He gets long right here. He puts his standard wrist box on it to the bottom of the PSAR. It moves out smartly. It peaks, it rolls over. He exits here for 3.1R in about 30 minutes. Here's Brian trading the British pound versus the Aussie dollar. On 5 minutes, he gets a sell-off with a COT of 2, standard risk, rolls over, exits for 2.1R. He's got 54 trades in this series. His expectancy is 0.7, meaning he's up around 36R over 25 trading days. So that's a 36, that's almost a 40R month. So right on track. Hamad scratches in DIA and in EWW, there was just no movement. And in EWZ, also no movement. So not much in either direction. George brings in 0.5 on the same short on DIA that we get. He doesn't take the stop and reverse. This is where on the trade I showed earlier, that was where the nice big about 2 to 3R was available in here. And then we got another R out of this one. But he does lock in the trade he's looking for 0.5. And micro losses here on EWW. He doesn't stick around for the afternoon trade. Let's take a look at the reports for tomorrow. On the 150-day look back, made a new all-time high again today. So we've got this COTA 2, a second COTA 2, and we're pushing again to all-time highs. No resistance overhead. Everything looks good. It closed at the very top of the day after the Fed announcement. All systems go. And you can see here that we've broken through the PSAR. We've had 3 days above, 4 days above that. There's the 5-day anchored VWAP, the 3-day anchored VWAP, everything's good. Here's the 10-day anchored VWAP and the 30-day anchored VWAP. So that just means buying pressure, all systems go. Overbought in every dimension, favorable volatility. Dashboard number 1 for the Dow. Strong support from Apple. That's going to help all of tech. Strong support in Microsoft and Merck. Very good for tech. Sorry, on the ETFs, the globals, some weakness in here in Mexico, Brazil, and Latin America. Weakness in EFA and Asia less Japan, but real strength in tech and the S&P and in the tech sector and the S&P. So the NASDAQ and the S&P tech all very, very strong. No surprises there. tech leadership all the way. Microsoft and NVIDIA and Apple follow-throughs. Straightforward. Some squeezes here in McDonald's that are interesting. Auto Framer still has quite a few goodies available. The ones at the bottom of the list are already pushing new 10-day highs, and that's why you see the reward to risk ratio for these as swing trades on a return to the 10-day high is negligible. That just means they're already at their 10-day highs. So that's where the relative strength is. Whereas these are the ones that have pulled back from the 10-day high and are trying to work their way back up. These ones down here are already at the 10-day high and pushing higher. So it's just a question of which end of the chart you want to work on. It's a matter of taste. The short-term trading value symbols continue to include Tesla, marijuana, clean energy, NVIDIA, Intel. All good. Ideal trading candidates. We go to the integrated market. The RL10 came out of the Yellow River here. The 30 is rolling up. The 90 is getting ready to roll up. This is all about accelerating strength. It's into the green and up we go. All right, guys, we'll get this published and posted. Those of you in the coaching program are going to want to, all the cohorts really need to listen to tonight's recording. Sunday's was good. Last night's was great. And tonight's was great. So we're really hitting it out of the park on the detailed coaching. So take good care, and we will see you live tomorrow.